Thank you for staying with us. The listing of Transcorp Power shares on the Nigerian Exchange Limited has sparked significant interest and optimism within the financial landscape, with the company's performance reflecting a robust trajectory towards growth and value creation. Now, earlier in the week, Transcorp Power shares closed with over 58 million units exchanging hands at a share of 294 naira 4 kobo per share, as the market valuation rose by more than 2 trillion naira at the end of the session. Let's get talking. And the Vice President, Head of Research at Cardinal Stone Partners, Mr. Philip Anegbe, joins me. Thank you, Mr. Anegbe. It's good to have you on the program.
Yeah, thank you very much. It's a pleasure to be here.
First, I'd like to ask what you think about challenges and opportunities in Nigeria's power sector.
Well, in terms of challenges, I see 4 broad challenges in the sector. And the first one is the issue of high trade receivables that had the consequence of difficulty or failure of some individuals to actually remit payments, right? Unfortunately, we've had government agencies also guilty of same. So I think that's a key risk within the space. But in addition to that, you also have the risk of exchange rate devaluation on performance. And that risk is likely to actually affect players within the industry in the form of its translation to gas prices, as well as the expenses that is incurred in more or less maintaining equipment, because most of the equipment is actually shipped abroad for maintenance. So exchange rate is actually a key risk when it's not very stable. And then you have the risk of elevated interest rates, which, of course, for firms within the space with very high leverage, they may have issues trying to refinance obligations in a very high interest rate environment. I think those are the key risks that the industrial sector faces. But then there are ample opportunities within the sector, particularly given a government that is looking to actually push forward with very pro-market initiatives. Recently, the Electricity Act was signed and is expected to actually improve incentives across the sector. And hopefully, the sector is tilting towards cost-reflective tariff. I think recently the minister made it known that subsidy on electricity is not sustainable over the long term. So maybe we'll begin to see a more gravitation towards that space. And in addition to that, we are seeing the likes of Transcorp Power increasingly focus on exporting power to other West African countries. For it, it's primarily coming by virtue of its strategic alliance with the West African Power Pool that is allowing it to actually export a sizable chunk of power. I say sizable because I think it's material at 16% to Benin Republic, and they're looking to expand that net. So that's some sort of blue ocean, in a sense, from a Nigerian perspective, trying to tap other markets with the excess power that they have. I think those are some very leading factors suggest that opportunities may just be opening up in this space.
I'll ask that, what really differentiates Transcorp Power within the power sector, considering how the sector is evolving?
Now, we did a quick analysis of Transcorp Power vis-a-vis its domestic peer Group and select peers across some emerging market countries, stocks like Gulf Power and a few other ones across the emerging market space. And what we found was that Transcorp Power is doing decently well, has done decently well on the basis of profitability. Looking at its profitability margins in specifics, its EBIT margins, its EBITDA margins, its net margins is relatively higher compared to some of these peers. Then in addition to that, I think the company has a very decent cash conversion cycle, which suggests that it's more or less has a very good capacity to actually convert its revenue quickly to cash, which is a positive, particularly in an environment where receivables have traditionally been an issue. Then in addition to that, I think the company sort of actually has, through its action in the form of helping to blackstart the entire grid upon collapses, confer the level of systemic importance to itself, right? Because whenever the grid collapses, you expect a very reliable, efficient genco to help to blackstart it in order to get the processes up and running across the space. So Transcorp has featured really strongly on that front. And that's more or less, in our view, sort of confers a level of systemic importance to the firm that may be critical to its outlook as well.
Well, what's your recommendation regarding the price of Transcorp PLC shares? And is there any upside potential for investors?
Now, in terms of pricing, we deployed the discounted cash flow valuation methodology to arrive at the 12 months projected market capitalization of about 2.4 trillion, which suggests a target price of around 323 naira. But then it's important to note that there are clear upside risk to this valuation, and the upside risk can come in form of eventual moderation in interest rates in the space. Because interest rate moderation will actually affect the discount factor we use in valuing the company. And our view is that after a very elevated interest rate in 2024, we're likely to see some moderation in 2025 on the back of tapering inflation, right? And maybe improvements in the overall FX liquidity space. So interest rates are likely to slightly taper, and that will provide support to valuation and maybe potentially spark a revisit of our target prices. But in addition to that, we think that a key support for the company would likely come in the form of its increased activity across the West African space. So if you could grow export revenue from about 3.3% some years ago down to up now to 16%, I think it's really very compelling case. And nothing says that the company cannot push strongly to do in excess of 20, 25%, and 30%, which will prove supportive both in terms of accretive revenue, as well as a potential impact of operating profit and eventually cash flows.
Stuff. Let me ask you that. Why should I consider purchasing Transcorp Power shares post-listing before I let you go?
Well, I think the case for Transcorp Power is clearly underscored by its strategic importance. I've talked about the systemic role of trying to black start the system whenever there's a grid collapse. But then in addition to that, if you're investing in this kind of environment, there are certain considerations that must be front burner. First, you are expected as a savvy investor to invest in stocks with relatively low leverage when the interest rate environment is elevated. And of course, you also want to invest in stocks with robust cash position. So I think Transcorp Power ticks both boxes because its leverage ratio is just over 300% versus close to 500% it was doing previously. So that's some improvement. And of course, with its robust cash position, it would actually deploy some of those funds into high-yielding, productive investment opportunities that could actually support other income and support overall company performance. So we think that those are some considerations that investors may look at because in this environment, you prioritize stocks with positive earnings correlation to interest rates, stocks with low leverage, and of course, stocks with a good dividend payment. So those are some considerations that you could look at. I think some of those boxes are ticked by Transcorp Power.
Finally, generally, what's your view on what investors should be looking forward to and expectations for 2024 full year performance?
I think what investors could be looking out for principally is to see how macroeconomic changes as well as corporate actions open up the reality of mispricing across some select stocks. In particular, for instance, if you look at Transcorp Power, the hospitality business vis-a-vis the holding company, the group, you discover that Transcorp Power, I think the market capitalization is in excess of 2 trillion. The hospitality business has a market capitalization of about 1 trillion, while the group is having a market capitalization less than 1 trillion. So it sort of actually suggests that they may be mispricing. So investors that are savvy, that are looking to strategically boost earnings, are likely to consider those kind of opportunities. In addition to that, you want to see stocks that are likely to perform very well in this sort of environment. Particularly, we think the banks are likely to perform very well in Q1 results, given where interest rates are at vis-a-vis what they were in Q1 23. In addition to that, we expect significant realized gains from the more or less sale of excess NOP positions across the space. So we think that banks will do very well, and we think that they will also be under pressure to declare good dividend in view of the rising interest rate environment.
I must thank you so much, Mr. Philip Anegbe, who's Vice President, Head Research, Cardinal Stones Partners. We hope to have you join Business Nigeria subsequently. Thank you so much. We appreciate this.
Thank you very much.
All right.